Hello. So today's session is about cash flow management and bookkeeping. Money. You're either a master of money or a slave to it, says the author Robert Kiyosaki. He's the author of the book Rich Dad, Poor Dad. So just want to outline where we are today. We have what is a lot of economic money mismanagement. And by that, what I mean is that generally people are struggling, it would seem, to actually manage their money properly. It's not just people though. People can go broke. And what we can see on the screen at the moment, we can see Burt Reynolds, Kim Basinger, where I'm moving my mouse, and MC Hammer, all very famous people who have gone broke despite earning millions of pounds. And sometimes it's a series of mistakes. Kim Basinger, for example, bought a town for $20 million, which she thought would be a good tourist attraction, and in the end ended up selling it for $1 million. She was supposed to have starred in a film called Boxing Helena, and about a week or two before the production was due to start, she pulled out and then got sued, and that's how she ended up losing everything. But companies can go broke, so can countries can go broke. So, for example, Lehman Brothers, the bank that collapsed, that we keep hearing about, and in terms of countries, Argentina, it's happened to Argentina, and it happened very recently to Iceland. So we're in a situation whereby anyone, anything can just run out of money, and generally it's due to cash flow mismanagement. It's an absolutely very valuable skill, being able to manage your money, and that is manage the money coming in as well as managing the money coming out, the expenses. Managing the inflow and outflow is what cash flow management is all about. So let me just set the scene and just give you some information about myself. My name's Lisa Newton. I formed a company called Boogles Limited several years ago on the principal sum of £150. I wouldn't still be here today if I didn't know how to manage that money. So regardless of where you're starting, whether it's on a small amount or a large amount, everybody still needs to know how to manage their money. My story is that originally I'm from Nottingham, so if you're listening in and you're thinking, what is that accent? Is it Birmingham? Is it Manchester? It's Nottingham. Think Robin Hood. I, at college, did the AAT accounts and the CIM certificate in marketing. Then I moved to London to do my degree, and my degree was in accounts and marketing. Following on from that, did a master's in investment management, and at the end of that course, a lot of my counterparts were going into the city to work in investment banks such as Lehman Brothers and others like that, Goldman Sachs, Morgan Stanley. I, on the other hand, in the same month of graduating, using £150, I used £100 for my overdraft, and my mum gave me £50, I formed Boogles Limited. And my inspiration was this book, Rich Dad, Poor Dad by Robert Kiyosaki, which I'll be talking about a lot because, you know, it was a very influential book, and he's written others in the series. First saw him on Oprah and thought what he had to say was very valid. And he talks about the educational system. The main reason people struggle financially is because they spent years in school but learned nothing about money. And the result is that people learn how to work for money, but they never learn how to have money work for them. You know, we're in that kind of situation at the moment whereby finances are all around us, but yet it's so badly managed. How many classes do you ever remember about money at school? You know, this is the thing. So initially with the startup capital of £150, my key sort of top tip would be it was all about spending money very carefully, not being frivolous and wasting it. Any income that came into the business was always reinvested back into improving the business and making things better. And the business initially was a bookkeeping business, so therefore one would think someone with a bookkeeping background should be able to manage the money. And likewise, I was helping other people, my clients, to manage their money as well, because in doing bookkeeping you want your client to stay in business and to be liquid and to have good cash flow. It's absolutely essential though that anyone in business learns to understand the numbers and what the numbers mean. So we're going to come on to bookkeeping a little bit later on in the session, but it is very important. Some people will think, oh, you know, bookkeeping is very boring, but you know, it's not boring. It's about understanding what your numbers mean. In terms of Boogles, we the team of us, the business grew from that initial investment of £150. I won various awards, Young Entrepreneur of the Year award, got to be on TV, shortlisted for South London Business and Enterprising Women. I actually wrote a book about bookkeeping called Bookkeeping Made Simple. I've got to meet entrepreneurs like Peter Jones off the Dragon's Den. The business has gone into other areas such as Waistline, which is a corset business. So it's been an exciting journey, that's what I can say. But primarily Boogles, we do bookkeeping. So let me go into startups. Many startups, many businesses, new businesses fail within their first 3 years. And it's not that the business was bad as such. It could be an absolutely brilliant business idea, but sometimes it's just literally the lack of cash, or lack of cash flow more accurately, that causes a business to fail. So let's just talk about what is cash flow. Some people get confused, and what I want you to always think about when it comes to cash flow is a bath. And so what you have is, thinking of the flow of money, you've got income coming in through the taps. So you think the water in the bath is the money, it's actually liquid cash. Income's coming in through the taps, so that's your pipeline, money coming in, and then you've got expenses going down the drain. And generally, as long as more money comes in through the taps, let's say plus 10, then goes down the drain, let's say minus 9, that bath will always have something in it. And think of your bath being very much like your bank account. So cash flow is all about the flowing and control of this money in the bath. You want to make sure that there's always water in the bath, i.e. cash in your bank account. So that's cash flow. Now, when we talk about expenses going down the drain, this is a key one. A lot of people do wonder where their money goes, and you know, you've got this guy here looking at these receipts. So where does it go? All I can say is, you know, you tell me. Although we do bookkeeping, we're always looking at receipts, and we could actually, yes, tell you, if you've got your receipts, where your money goes. Look at your receipts, very important. Never just throw these things away, but actually analyze them and have a look and see where is, you know, this going down the drain. Where is it going? Where is your money going? And oftentimes it's simply on expenses and on living, or if you're running a business, just on the business ticking over, let's say. But sometimes, unfortunately, it is literally down the plug hole. People can be very wasteful. And one key thing to apply, in whether it's in your business or in your personal life, is that it's not so much really even about how much you earn, it's much more about how much you keep. And if people demonstrated the principle much more of being more savvy with and taking care of the little that they have, and probably people would be in a better place. Unfortunately, there is a lot of debt out there, and sometimes basically a lot of money is just going to literally meet interest repayments. And we find countries like Greece, that's what they're struggling with a lot, is that their money that they've got coming in, a lot of it's going just to meet interest repayments. And often what you'll then find in those situations is that people do wonder, where is the money going? Because they're not seeing anything, or, you know, it's almost like the cash is disappearing into thin air. They're not seeing where that money is actually going. But interest payments are you know, just a fact of life. If you've borrowed money to live or do whatever you've done with it, there will be interest to pay. In a business situation, if people are finding that they therefore have got these interest repayments to make and they haven't got any money, their cash is low, then they often need to have investment, and that's whereby they end up going to entrepreneurs, people like, for example, the Dragons and Dragon's Den, or just to business angels, and they will be asking for investment to get an idea off the ground. But it's still very important, regardless, that if you ever were given any money as an investment from a business angel, that you still master and to look after the cash that is invested into the business, because those investors are going to want their money repaid. So cash flow planning, let's have a look at that. The most important word in business is cash flow. And there's a little saying, which is that sales are vanity, so it's not about turnover, it's not sales, how much have you sold. Profit is sanity, because we all want to be profitable, but cash is the reality, and cash is literally what you have in your bank account. So you think about that, Bath. It's what you have sitting in your bank account, and cash is what makes things happen. You know, if you've got to pay people or your suppliers or employees, whoever it might be, and there's no cash left to pay them, I doubt they're going to hang around for very long. So it's very important that you have cash, you're liquid. So let's say, for example, and this is where cash flow planning comes in, if you start off with £1,000 in your business or in life, wherever, you need to have a plan as to how long that cash will last you. And this is what cash flow planning is about. It's looking at your timing of payments. What is coming in on what date and what is going out on what date. And it's important that you try and control your cash flows. So look at your direct debits, items that are automated, and also be looking at standing orders. And can you get in standing orders? Can you get your clients or whatever it is that you're selling, that to be automated and in by standing order to ease your cash flow? So let's have a look at an example of a cash flow forecast. So what we've got here is we've got the time at the top. So in this example, the period is by month. So this is April, May, June. Now this could be by week, it could be by day, it could be by year. It doesn't really matter, but it's always a time that goes up at the top. This cash flow forecast is split into A, B, C, D. So under A, we've got receipts. And in this example, we can see we've got cash sales, ABC Limited, bank interest, capital injected, and assets disposed of. So this is the example of the receipts that we've got coming in, and we can see that initially capital was injected of £1,000. In April, £100 came in cash, £50 came in from ABC Limited, £150 came in April, £200 in May, £350 in June. So that's line A, our total receipts. Then we've got our total payments, and these are the kind of key sort of expenses that we can expect. Could be in business or just generally. You can do this for business or just for your own personal life. So payments, we've got a website of 250 in the beginning, because we're seeing this very much as being a company that's just started off. So website. Then we've got rent and rates, 200 in the first month because we've paid £100 deposit, and then it's £100 after that. We've got insurance, a steady £60 a month, stationery, mobile, advertising, a little bit higher in the beginning because we've...
Hello, Lisa.
Yes.
Your audio seems to have gone very fuzzy.
Oh. I haven't done anything.
I'm not certain what what we can do is just, I think where it went cut wrong was the receipts point.
Okay. I'll just start again from receipts. So what we have with receipts is April, May and June, and we have £100 coming in cash sales in April, £100 in May, £100 in June, and then ABC Limited has got 50, 100 and 250. So the total receipts for the month of April is 150, month of May 200, month of June 350. And in real life, if there were more pipelines of receipts coming in, we'd add those in here. So this is just a short sort of example. So line A is all your total receipts coming in. Then we have our payments. So this is a list of typical payments that you'd see in a business. We're seeing this very much as a startup example. So in the beginning you might have a website, get a designer to do something there for you, pay for your website fees, let's just say 250. Then we've got rent and rates. So 200 in the first month, let's say £100 as a deposit, £100 rent after that, so £100 there. Insurance, £60 every month, just a flat rate. Stationery, just say £10 a month, and so on. Our total payments in this month of April is 740. May, 320. June, 340. Then line C is our net cash flow. This is key. This is what cash flow management's all about. Net cash flow is A minus B. If we look at A, 150, line A, 150 in April, and then we've got 740 in April for the payments. A minus B, so 150 minus 740, our net cash flow. So it means that in the month of April, we've got a cash outflow of £590. So the net cash flow is negative, and that's why it's in red and it's a minus. In May, it's the same situation. We've got £200 coming in, but yet £320 going out. So our net cash flow again in May is negative. And in the start of a business, this might be the case because there are certain expenses, like, for example, advertising is a lot higher in the first month, that you're going to incur initially a lot of upfront costs. But in this example, we can see that in June, starting to turn around a bit, where our receipts are 350 and our payments 340. So our net cash flow for June is actually positive, it's £10. And then, so this is our net cash flow, a line you always must be keeping an eye on because you always want it to be positive and not negative. And in terms of our closing bank balance, we would begin with £1,000 invested in the business, let's say £1,000. If we have 150 come in, but 740 go out, we're going to end up with, at the end of April, £410 in the bank account. If we have 200 in and 320 out, at the end of May, we're going to have £290 in the bank account. And then in June, 350 in, 340 out, we'll have approximately 300 in the bank account. The other way to look at that, if you notice, is that our balance here plus this net cash flow goes to 410, plus the net cash flow goes to 290, plus the net cash flow goes to 300. So some people find it easier to think, okay, 1,000 plus 150 minus 740 is 410. Others can see that if this is what we start with, add the net cash flow, and that's what we'll end with. So looking at a cash flow forecast, how cash flow planning, how a cash flow forecast can help us in our planning is that we can see, okay, if we start with 1,000, by the end of June, so, you know, the first quarter, after about 90 days, we're going to have about £300 left. And you'd carry on with that cash flow, ensuring that there's always going to be something left in the bank. And if you ever see that this closing bank balance is going to be negative, then that just alerts you to the fact that you either need to sell more that month or reduce your payments somehow, because, or get an overdraft, because you can see that you're heading into the red. So your forecast is just to help you just to stay in the money, as they say, as a cash flow forecast. Now, timing of payments is critical. So it's what cash flow is all about. If we start with £1, let's say on Monday, and we're expecting on Friday for £10 to come in, we're looking forward to having £11, which is great. But if we've got a payment out to make on Thursday, just the day before, if we've only got £1 and we have to pay out £2, that's not quite going to work because we don't have enough money in the bank account. So this is what we mean about cash flow, and just enabling our payments that when they leave the bank, there's actually money in the bank. You can't take out more than what's in there. So in this example, what you'd have to do is see if you can get some of this 10 to come in earlier in the week so that you've got enough to pay out for this 2. So timing of payments. And just actually back to that example, sometimes even if you're a day out, what can happen, particularly if you have direct debits or standing orders, say you've got a payment that's going to come out, the payment comes out, there's not enough cash in there, it bounces, you end up with a bank charge, and then the money that comes in, you get it, but it's not as much as you were hoping for. And this is how people can lead into cash flow problems, because I mean, bank charges maybe £35, and you just for the sake of not having £1 in your bank account, it's quite unfortunate. So things like that happen to people all the time, so very important just to be keeping on top of these things. So other ways in which you can improve your cash flow: basically look at your payment terms, look at when items are due to be paid. A lot of people have things coming out around the end of the month. Why they do that maybe is because they're expecting to get paid around the end of the month, and so they've got their payments coming out. You need to give yourself a bit of room, a bit of space, so that if money you're expecting comes in is a day or two late, it's not the end of the world, because you've spaced out the items that you've got to pay outwards. So do be looking at the payment terms. Look at your spending patterns as well, which is quite important, and just see when do you spend the most money, when does your bank account tend to be low, and can you sort of turn that around. So just look at your pattern of spending. You see a lot of people who everything seems to happen at the end of the month, and then around about the third week of the month they've got no money left because they've spent everything, and there's always that third week in the month, just the week before payday, that everything seems to have run out. So have a look at that. And is it that are there some bad habits that you've got to review? Is it that you haven't opted for the standing order, and yet if you did, perhaps that would save you on charges, because you keep forgetting to pay something and then you're charged a late payment fee. Sometimes these things just takes just a little bit of organization. Getting yourself organized can save you time, save you money, save you a lot of stress. And just planning when things are due in and when things are due out, just so that you're taking advantage of the full payment terms. Something says pay for it in 28 days, pay for it in 28 days. Don't pay for it next week unless you really want to, but be planning ahead, managing what you've got. On the note of planning, this is where we come into budgeting. So for good cash flow management, budgeting is always helpful. So budgeting is just all about estimating your expected income and estimating your expected expenses. And the key thing is, if your income keeps falling short, not enough's coming in, or your outgoings keep being too high, too much is going out, then basically there's a problem somewhere. So you can improve your cash flow management by basically having good budgeting skills and just good budgeting habits. So this is just an example of a budget that you might have just for a month. So in this example, it's just the month of August 2009. You've got income coming in from two sources leading up to 1,950, and we're expecting some interest to come in. So in total, we're budgeting and hoping for 1,953 to come in as income. Then we've got expenses, list of typical expenses. This is what we've budgeted for on all of these items. We're totaling our expense, we're expecting it to be 1,805, which means we hope to have a surplus, which is cash in the bank, of £148. And according to this budget, it means £148. You might save that, you might go and get your hair done, you might go on holiday, you might save up for something, whatever you like, but at least you can see you're on budget. And so many people just don't have this and end up, they get a phone bill, £200, if you're just thinking about your expenses and what you've got going out, it will make you more mindful of either when you're talking on the phone or when you're doing something, or whatever's going on, because if you've got your budget in mind. So it's really important just to know how much you're planning for. And this can be at any age, it's not just for young people or for old people or anything like that. Budgeting is at all times of life. What I saw here is this newspaper which says poverty forces 1.6 million pensioners back to work, because some people have attempted to retire but realize that they actually can't manage off the income that they're getting in, because you know the budget just doesn't work, so they've been forced to go back into work. So
Lisa,
yes, yes,
oh, hi Lisa.
yeah.
You seem to have cut out a bit again, and I don't think I can hear you now. Are you talking?
No, I was just talking along. I haven't touched anything.
Okay, no, it's no problem.
I'm back.
If you start from when you just read the headline.
Okay, so budgeting is something that affects anyone from any age, and what we're finding at the moment from this newspaper headline is that poverty is forcing 1.6 million pensioners back into work, often because they're finding that the budget that they've set aside for their pension isn't actually enough for them to live on. So all ages, we all have to have a budget and ensure that the income that we're getting in is enough for the expenses that we're spending out. So it's a time to think, to be a master of money. And we have this lady here harnessing this pig to be a master of money. And when it comes to expenses, to list your expenses and seriously to get them under control. Very important that you shop around. Good website, changesuppliers.com. Cut out the unnecessary and think, plan and budget. That's how you get on top of your cash flow, how you manage it. Problem is, people don't plan to fail, but they fail to plan. It's very important. So here's just an example of a budget. It might be income on one side, whether it's jobs, interest, bonuses, business, whatever the income is, total comes in, and then you've got your expenses. Some expenses are fixed, some are variable, and some are optional, things like Sky and holidays and going out, that kind of thing, and the total out. And the one thing you'll always note is that often the income side of any budget statement always seems to be a lot shorter than the expenses side. Well, that just really seems to be the way things are. And you just have to ensure that more comes in than goes out. So when you're thinking of your piggy bank, more needs to go in than go out. Where a lot of businesses go wrong is that, and it's not just business, but it's in your personal life too, because there's a saying which is that how you do anything is how you do everything, and often it's low sales. So cash flow problems will occur when sales are low, or alternatively when there are huge overheads, so when expenses are very high and these things aren't paying for themselves, and when people have bad debts. So either you're owed money or you are owing people money because of things you've bought and that you can't afford to pay for. And it's interesting that, you know, you've got your personality types, your big spenders and people who are quite tight with their money. Both can not necessarily have cash flow problems, but just it's the way they think of cash differently. So it's important that with all sorts of cash flow management, when you think of little acorns growing to huge trees, it's all about planting seeds. So how you do anything is how you do everything. So it's not about spending absolutely everything. It's not about being really stingy. It's about striking that balance. Just on the whole note of cash flow, I just wanted to mention this book, again by the author Rich Dad Poor Dad, Kiyosaki. And this book is called Cashflow Quadrant, and it's quite relevant, I believe, for this seminar, which is on cash flow. Really good book to try and get hold of, because it explains just how there are 4 quadrants, like 4 different sort of spheres in which you can earn your money, where your cash comes in. And it will really help you think about cash flow differently, I believe. So it talks, so we're just first of all going to look on one side. So we've got E, S and B, I. So on this side you've got the employees, where you have a job, and you've got the self-employed, where you own a job. Then you've got the business owner, where you own a system and people work for you. and you've got the investor, which is where money works for you. And this is called the cash flow quadrant. And so what you're asked to do is just think about where it is you earn the majority of your money. So people on this side of the quadrant, the employees and the self-employeds, they either have a job or own a job. And there's this saying with the 40-40 rule. You work 40 years of your life for 40 hours a week and then retire off 40% of what just was never enough in the first place. So it's all about how you earn your money here. Often it's selling time for money on this side of the quadrant. It's where 90% of people are. And then thinking on the other side of the quadrant, the business owners and the investors, these people are all have money working for them. So when we talked about being a master of money or a slave to it, these people have really mastered how the money can work for them. And the end result, basically, poor people, rich people.
Sorry, Lisa.
Yep. Have I cut out again?
It went out again. I'm not sure what's going on. But from the right side of the quadrant.
Okay. So
back on, I think. That.
This one. So on this side of the quadrant, it's more about selling time for money. And on the opposite side of the quadrant, it's more about having money work for you. So with the theme being mastering your money, that's what business owners do. And when they say business owner, it really means big business, like at least 250 staff or more. So big business owners, an eye for the investor. So cash flow, depending on where you earn your money, the end result will be poor or rich, and by rich you've got freedom on this side as well. So very good book, Cash Flow Quadrant, highly recommend it. Now in order to get on this side of the quadrant, very important that we get organized. So now I'm just going to go into a few bookkeeping tips with you. Often people will start a business because they are very good at doing the technical work. And what we found at Boogles is that very few people actually like to sit down and do the books. Basically, what bookkeepers do is literally look at every single penny. So when we think of the receipts, what we're doing is looking at every single penny. In any business, you need 3 types of people. One person or one type of people, they have to make the beans or do the beans. So that's often the business owner. They start this business because they're very good at making the beans or doing the beans. You need those people in your business. Next, you need people who can sell the beans, yeah? Your sales and marketing people. If you have a whole cupboard full of beans and you can't sell any of them, you might as well pack up and go home. You don't have a business. So someone has to be good at selling those beans. And then you need the bean counter. You need someone to count the beans and keep an eye on the finances. So ensuring that you've got cash in the bank, people can get paid, you can get paid, and everyone can be happy. So generally, what good bookkeeping can do, the equation, you've got debits and credits, and basically when you're on top of things, you know where your receipts are and all the rest of it, it gives you less headache. It just means you're more organized, and you know where you are. And then when you know where you are, it means you're in control, and you can plan for what the next step needs to be. So you've got your budget, you can see whether you're on track or not, and you know you're on top of your cash flow, and cash is hopefully flowing inwards. And if it's not, you've got a plan to turn it around. So you just know where you are. You can get a strategy in place, helps you with your pricing, and therefore you can make decisions with all the information at your fingertips. It also makes your accountant happy. You can save a lot of money. If your books are in good order, your accountant will often give you a better price because there's not a lot more that they have to do. If you're registered for VAT, your VAT returns are nice and easy because all the figures are where they should be. And it also means, quite frankly, you're just more likely to still be here this time next year because you've managed your business well. You look a lot more professional when you can put your hands on things, and it's really important that you get the money owed to you. And if you're on top of your bookkeeping, you'll know exactly who owes you money, and you'll know exactly when they're due to pay you. And you can also keep an eye on your suppliers, because often many people, if their books aren't in order, if their supplier said to them, you owe me some money, they've got no idea whether they're lying or not, or they've made a mistake or not. And so at least when your books are in order, you can keep an eye on them. Don't just, because you've got a statement from a supplier saying you owe X amount, doesn't mean you do. You know, they could have bad bookkeeping. So it's really quite a good thing to be able to keep an eye on your suppliers. So just tips for getting your books in order. It's nice to have an in tray, so just something that sits on your desk. I would say 5 folders and a box file. So first folder, number 1, you want to put in there all of your sales invoices, numerical order, the most recent one on top. That's how you just keep all your sales receipts together. Then you want a folder for all of your unpaid bills, and that is in A to Z order, so from A limited to Z limited, everyone you've not yet paid. You want another folder, third folder, for all your bank statements and all your credit card statements in numerical order. Then you want another folder for all your paid bills, and again file them in A to Z order, A limited to Z limited. And then the 5th folder is for your inland revenue stuff, so perhaps keep in there your national insurance number, any passwords, any copies of old tax returns. Remember, you need to be keeping your files and receipts for a minimum of actually I say maximum of 6 to 7 years. So you want it nice and organized each year. And then you'll have your box file for all other stuff, so things that you haven't quite decided what you're going to do with it yet. And basically at the end of each year, you put your sales invoices, your bank statements, your paid bills into a fat file. You can use dividers to divide them up in sections, give it to your accountant with a copy on a disk. So if you're using an Excel spreadsheet, or if you're using an account software, you put the backup on that and you give that to your accountant, and then start the files again for the next financial year, your bank statements and your paid bills. So it just helps just to keep it all neat and tidy. It's just a bookkeeping system you can use. Good bookkeepers save you time, help you look at the pennies, make sure you're recording costs, keep an eye on your income, warn you if your cash flow's down, and can help you chase up the monies due in. Overall, it's just general peace of mind. For more on that, Bookkeeping Made Simple, as I say, is a book that will outline making bookkeeping very simple. So what you want is peace of mind. You don't want the chaos, you just want nice tranquility. And so that's the end of the presentation. All I would say is become a master of money and start mastering your money today. I thank you. And now we're going to open the floor up to questions. You can also contact me, Lisa, lisanewton.co.uk.